looking at a day where, we've got a bit of a rally and pretty broad-based, very different from the tone last week. But, I feel like earnings are going to shape, especially NVIDIA earnings might shape.
Yeah, I was going to say it kind of
this week.
I think Wednesdays after the market, NVIDIA, that's what everyone's focused on. We also hear from retailers this week, including Walmart, among others, so get a good read on the consumer. So we're not done yet with earnings season and going to get a good view into quite a few different areas of the market.
Yeah, NVIDIA has become like a big event in the same way that the FOMC decision or the monthly jobs report has become a big event. There are watch parties devoted to it, so we'll be all over those results.
Wait, there are watch parties?
Yes.
Yeah.
Aside from us?
I didn't get an
At
invitation.
bars.
That's because we are on air. They actually, guys, they actually played us at a watch party.
Yeah, they played
They
us.
did, yeah.
Joe Weisenthal.
This is
especially
totally
video
new
coverage.
information for me.
Yeah.
But apparently options are just implying what, like an 8% move to the up or downside for NVIDIA. Isn't that slightly less, I think, than normal?
Yeah, I mean, definitely some of the bloom has come off the rose. We should point out today here, when you look at the markets, the biggest drag right now on the S&P 500 is NVIDIA, believe it or not, down about 1% on the day, while Tesla, of course, leading to the upside. The net effect of it all is an S&P 500 that looks like it's going to close out the day higher by more than 20 points, or roughly 0.4%. The Dow Jones Industrial Average not participating in the rally today. It's going to close lower by roughly 50 points, or 0.1%. The Nasdaq Composite and Nasdaq 100 each higher by more than 100 points, 0.6% on the Nasdaq Composite, and the Russell 2000 squeaking in with a modest gain of about 0.1%.
Just going to say, don't cry for me, NVIDIA. It's up more than 180% so far this year. As for today, the S&P 500, Scarlet, most names are higher, 320 to be exact, 182 to the downside, 1 unchanged.
Yeah, given how modest the actual advance in the S&P 500 is, when you look at the sector performances, it's green all around. Only one sector in the red, that is industrials, losing about 0.2%. But everything else is green, led by energy and communication services, each up at least 1%, and REITs are gaining about 0.9%.
All right, guys, I'm going to the names that really dominated the S&P 500, the Nasdaq 100 today. These are among your top gainers.
You're just sticking with the S&P, is that?
No, and the Nasdaq 100.
okay.
Does that work for you?
Thank you.
Okay.
I think it's kind of overlap. but
Here
sure.
too, please. Okay.
All right.
Well, I believe in overlapping. All right, so let's get to Super Micro, guys.
Welcome back, by the way, Carol.
Thank you very much. I missed you. I had Romaine-itis. I didn't know if they told you that. That's why
Is
I
that a
was
good
actually
thing or
home.
bad thing?
No, it's not a great thing. All right, Super Microcomputer. It is your number one gainer in both the S&P 500 and the Nasdaq 100, up about 16% today. This company approaching a deadline, as you know, to either file a delayed 10K annual report. So we're going to watch for some headlines on the Bloomberg, or submit a plan to file the form to the Nasdaq in order to remain listed, I should say, on the exchange. Deadline is today, so we'll be watching for this. You know some of the concerns: damaging report from a short seller, U.S. Department of Justice probe. There's a lot going on in this one, but investors certainly bidding it up. Another one, Moderna, up about 7%. It was upgraded to buy from hold over at HSBC. Analysts saying the market isn't giving enough credit to the firm's pipeline. So an upgrade, but they did cut the price target to 58 from 82. Stock's down 60% year to date. New price target means you got some upside to this one. So again, Moderna finishing the day just under $40 a share. Tesla, this is your number 4 gainer in the S&P 500. It is, of course, leading self-driving stocks. This is members of President-elect Donald Trump's transition team, are seeking to ease federal framework for fully self-driving vehicles, which, of course, Tesla would be a beneficiary of. So investors moving into this one. Tesla shares up 5.5% today.
All right, you got the gainers, I got the decliners. I do want to start with NVIDIA. That company, of course, reporting after the bell on Wednesday. Shares falling today by 1.3%. The information out with the report that the company's asked its suppliers to change the design of the server racks for its new Blackwell GPUs due to an overheating problem. Maybe we'll get a little more information about that on Wednesday, maybe not. Should note that even with today's 1.3% decline, shares are still higher by 183% so far this year. So take that with however you will. Palantir shares falling today by 7%. They fell as much as 10.5% intraday, the worst intraday since August. Follows the record run that the company has had this year, and Friday's record high after the company said it would move later this month from the New York Stock Exchange to the Nasdaq. Even with today's decline, down about, or higher by about 260% so far this year. And finally, Uber shares fell about 5.4%. You heard Carol mention the report over the weekend from our team here at Bloomberg News about Tesla. Well, that's actually not so great news for companies like Uber and Lyft, because if Tesla was a beneficiary of a framework for fully self-driving vehicles from the federal government, then ride-hailers such as Uber and Lyft would face more competition with a network of robo-taxis from Tesla that could compete with these ride-hailers. Once again, Uber down by about 5.4% today.
True, but didn't Waymo and Uber expand a partnership or something? So maybe there's it's Lyft that also seems to be struggling on that way. All right, let's get to the bond market, guys, because I was talking about the fact that when I left 4.5 weeks ago, you got the 10-year yield was at like 3.6%. No more. We're about 4% for the 10-year yield. We're a little bit lower on the bond market today. A little bit of buying came in about halfway through the day. But just for some perspective, this has been a massive re-rating in just a few weeks, guys.
All right, let's get to some of the stories that have definitely piqued our interest on this Monday. And this one has to do with what economists are kind of grappling with in a second White House by Donald Trump and his team. And basically, one economist over at Nomura, Rob Superman, he is talking about adding Truth Social, right? We know that as journalists, that a lot of information got announced on Twitter last time around. And so we kind of have to watch what's going on. But they're also rethinking their models, hiring in teams that maybe they just need to kind of react differently and get ready.
Yeah, analysts are scrambling to adapt. They're developing new models. They got more people hired to crunch thousands of lines of trade code and putting a lot more face time with nervous clients. The whole idea is to produce forecasts that will help traders, businesses, and governments navigate the new chaotic world. But you guys remember 2016 to 2020, just being glued to Twitter to
didn't we go through all this before? And isn't this kind of a losing battle?
We did.
I mean, some people get it right, but most people just get it wrong.
But you got to make models, right? As economists, that's what they do. So they got to figure out.
They have like 20 different models. That's the problem.
But just in case one policy goes one way, doesn't mean the stocks go that way. For example,
well, that's the point.
With in the first Trump presidency, oil stocks didn't do well, and alternative energy stocks and solar stocks did well, which you thought would have been the opposite.
Yeah, that's what I'm saying.
All right.
I'm glad. So add that to the models.
Thank you.
Moving on to a new model.
You know what? There's another story that we're watching, and that is about how schools, an elite private school in Miami, is building a $30 million endowment in order to provide teachers with a stipend, because all these schools, boarding schools, private schools in southern Florida, need to account for the fact that there's Wall Street South talent coming in, but they don't want to move there unless their kids have a place to go to school.
I'm fascinated by this story because we heard so many anecdotes, particularly when Ken Griffin announced they were going to move down there. A lot of these folks are going down there and they couldn't find, and they had to move back to New York. They were like, look, we just can't find a place for our kids. So until that's sorted out, it's going to be some growing pains here in Miami's development.
But isn't that kind of crazy that the endowment is going towards teachers because they can't afford to live there versus an endowment going towards, say, scholarships or something? Like, there's something fundamentally wrong with this model, no?
$11,000 a year in stipends to help these teachers with rent payments or mortgage payments.
Especially when you're charging $52,000 a year in tuition. The only thing I would say, it just speaks to the larger housing crisis.
Yes.
Like, you have all these great cities and things going on, and yet people can't afford to work
New Yorkers who send their kids to private school would think $52,000 a year.
That's a bargain. Oh, that's bargain. Yeah, I would love to be paying less than that. But also to this point too, and just on the Ken Griffin, there was another story too about him, building this empire down there. And there's apparently one big building that's kind of in the way of everything he wants to do. And apparently there's this mysterious buyer who's buying up all the individual units in this condo building. No one seems to know who it is, but we should just point out this building is in the way of building up that big sort of campus that Ken Griffin is trying to build.
Maybe they could put teachers in there to live, and then they would solve the housing problem.
So is that where the endowment money is going?
Maybe.
I like how you think, Tim Stenovec, but that's not going to happen. You know that.
All right. Is it Goliath?
This is like an extra layer, Carol, to your point of the housing crisis. Like, this is like an added-on layer.
But this is happening all around the country, right? I mean, in Silicon Valley, teachers and firefighters and policemen don't have anywhere to live because houses are $2 million. So it's just happening wherever there's a gravitational pull.
Yeah, stop just, it's not just like building homes, right? Build affordable homes where people need them. Like, I think it comes down to that. All right, I am so happy to be back with our normal team. So, it's good.
We're far from normal, but thank you.
We missed you, Alex. Well,
I have no idea what she's talking about.
None of us are normal. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.